All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Tuesday, the 2nd of November. We made it to November, guys. Less than 2 months to the end of the year. Christmas coming up, Thanksgiving before it. Don't get one in front of the other. Anyway, it is Tuesday, the 2nd of November, 2021, in a beautiful but overcast Bernie, Texas. Hopefully, you guys are having a great day. It's good to see Hank and JP already checking in. Man, lots of talk here. We've got, last week was kind of crazy, man. So, you had the Bank of Canada, what I'm trying to say, stop its QE, I guess what I'm trying to say. I can't think of the words. Words are hard today, okay? But anyway, you had that happen out of the blue last week, and then you had the RBA, the Royal Bank of Australia, just decided they weren't going to defend their yield there, and things shot up, and now you've got the U.S. over here. We've got the Fed meeting leading into tomorrow, where again it's widely expected that they're going to say, okay, taper is going to start, but again, guys, it's the same. I've been talking about this past year. We had the Fed talking about how they weren't planning on raising rates, next year or whatever, maybe in 2023 or something. And then I said no. I said, I believe that they were going to be raising it in 2013. And of course, as the year's gone on, now they're looking at potentially a couple of rate raises next year. But again, guys, as we look at this, with prices rising as they have been, I think it's going to force their hand. I've used the term that they've been, I've said many times this year, they've painted themselves into a corner. You've got the economy doing the one thing, and then you've got their rates doing the other. And the problem is, when they go and raise the rates, the idea of raising interest rates, guys, is that it makes it more expensive to borrow. And if it makes it more expensive to borrow, then there's less borrowing done, right? The idea being that that's going to cause less loans to be taken out, which means, remember, actual dollar creation, money creation happens at the bank level when they make loans, right? The Fed, what they do, it just sits in bank reserves. Other than when the banks are facilitating the transaction between the Fed and the government with the bonds, right? But I mean, so really, it all happens there at the bank level, and so the idea again is that it lessens the amount of loans, and then there's less money chasing the same price, the same products out there, which means prices drop, right? Anyway, so that's the whole idea there. But again, guys, we year over year, I've shown you guys, we have a significant decline in loans as it is already. And so I think this is going to have a much bigger effect. But than expected. But they can't not do it. It's going to be worse for the economy if they don't raise rates. And so I think that's coming up sooner than expected. I don't think it's going to be mentioned tomorrow. I mean, I wouldn't be surprised if it did, but I don't think it's going to. I think it's still too early. But I think next year it's going to see a bunch of raised rates. And people are like, oh, they can't do it because it'll crash the economy. You know what? The economy is always the redheaded stepchild. And my apologies if you're a redheaded stepchild. It's a little colloquialism there. But but really it is. At the end of the day, the Fed doesn't control things, guys. And this is what I keep trying to get you to understand. The Fed steps in after. They're always reactionary. They step in. So they do things after the market's already done things, right? So the market runs really hot, and then they have to, and then they think they have to step in, but they already step in when it's too late, right? Or the economy's not doing so great, so they step in, but they already, they step in and then they overshoot. And it's just, it's this history of this. But this can be no different here this time, except potentially, again, as I've been talking about for a while, potentially a much bigger hit to the economy. I've talked about the inverted yield curve. We had the 20 flip the 30 recently, last week. Now, that's the long end of the curve. And the one you really want to watch is the 3-month and the 10-year. But, the rest of the curve's flattening out. We've got a little bit of inversion happening at the really, really short end of it. Like the I'll show you guys in a minute here. I think we get like the 2-month and the 5-month or something like that, I think. So we'll take a look at that as well. But anyway, who else is here? We've got Keith is here. What's going on? Good to see you. Spiral Architect checking in. Aramis is here. Wynn is here as well. Boris checking in. Jared the Great, still love the name. Andrew Bennett is here. Data, what's going on, guys? Yeah, so good to see y'all checking in. By the way, hey, listen, join us at howtotradetowin.com. We'd love to have you there, guys. We don't have the 50% off the first month. That was done, over the last week or so. But this week, here's something we've never done. So some of our members have been with us since the end of time, right? Or since the beginning of time, I guess, since we started. And so what we did to reward them was we give them this OG pricing, where they always have their original price. They, no matter how much we raise our prices, they were always going to get that older pricing, right? So now you've got a chance to get that same pricing, and that can save you up to 50% on what's already there on all levels. So the way you do this is you go here at howtotradetowin.com, you go to join us up here at the top, and then you go to the tier 3, the biannual. You pay regular price for that, and once you do that, I will go into your account and I'll set you up for it. But after that 6 months is up, you're going to have that OG pricing for as long as you remain a member. So you can go, after that, you can go month to month, and you'll just pay, instead of $199 a month, on month to month, you'll pay $100 a month. Bigger discounts, obviously, for the longer terms, right? If you want to buy a quarterly, a biannual, or an annual. I think right now you already get discounts when you buy I don't know if you guys understand this, but when if you just do month to month, it's around $199 a month. If you buy a quarterly or a biannual or an annual, we give you discounts, greater discounts for the longer period of time. And it's because I believe, guys, that the more that you're into this learning, right, the more you're with a group of people who are all about the same thing, they're all about learning, the more you get to learn, okay? And so I reward you for that, give you much more inexpensive. It averages out monthly, right? But the OG pricing gets you down even further. It gets you down even further. So in the case of a yearly, if you buy an annual with the OG pricing, guys, I don't even remember what is that. It's like I don't even remember what it. I don't even remember what it is. I think it's like $900 and something. Rather than if you buy month to month, it's $199 a month, so about $2,400 in a year. If you do the annual normally, it's $1,500 and some change. So you get a good discount, you get $900 off. But if you do the OG, if you have that OG pricing, it's not even $1,500 something, it's like $900 and something. So you get a significant discount. So anyway, if you guys are currently paying, full price with us right now, and, you like what you're doing here and you plan on being here a while, I would suggest that you jump on that. You can't beat that kind of pricing. If you have never been with us and you like the sounds of that, then jump on it. You can as well. It's only for this week, guys. I'm not sure that I'm ever going to do that again, but we'll see how you guys like this. We'll see how see if it interests you any. Again, guys, the whole goal is just to get people in here so that they can learn. And the more people we have in learning, the cheaper we can make it. So it's really that's really as simple as it gets there. So anyway, hey there, Brian. Good to see you. ARM's here. Flamin' Gala's here. Dominicus, what's going on? Good to see you checking in. Glad to see you. Yeah, definitely been a while for that live, right? Let me see here. Hank says, wintertime in Europe started. Everyone is 1 hour off. I guess you got that time change. Yeah, we have here in the U.S., guys. Don't forget, we're going to gain an hour this weekend. So the stupid daylight saving times nobody needs anymore. We'll be doing that now. We'll gain back that hour we lost earlier in the year this weekend. So yeah, and then I guess everybody be caught up, right, Hank? Higher Low Crypto, what's up, buddy? He says that's an outstanding deal if anyone isn't subscribed. He knows. He's been with us for a few months now at least. Again, guys, I think the biggest thing we got going for us is people join and they tend to stay for years. And they're paying the regular prices. We've never given anybody this OG pricing other than those original members from 4 years ago, 3 years ago and whatnot, before we started raising our rates. By the way, as we continue, I'm nearing completion finally. It's taking a little bit longer than expected of the new website and the new back end and everything. It'll go live at TexasWestCapital.com when it does. And at that point, we're going to have different pricing structures. They won't be cheaper, which is why it's probably a good thing to to jump in this if you if you're paying regular price right now. But we're going to have different services that I'm going to be able to offer, guys. I'm going to have some very limited coaching spots, one-on-one, maybe some group coaching spots. But they'll be very limited because I have limited time. But if you're looking for that much more personalized one-on-one, listen, here's what I did this week. What can I do to improve kind of thing, and really have me work with you, then that'll be available as well. So anyway, lots of stuff going on. Like I said, howtotradetowin.com, guys. We'd love to have you there. Our members just make it absolutely amazing to be a part of it. Seriously. Let me see here. What's going on, Scotty? Good to see you checking in. Higher Low Crypto goes on to say you will get more from Chris than you get out of other competitors. I've tried several popular ones on Twitter, and nothing compares to this subscription. Well, hey, man, I appreciate that. Again, guys, I've never, subscribed to something like this. What I do, I just always, I base it off of when I started, what I would have liked to have known, or what I didn't know I needed to know. And that's how this has all grown, guys, from that. So, maybe that's why. But, again, we get that same comment from multiple people that what we provide is just so much more beyond what anybody else does. So, again, I'd love to have you there. My stream normally starts 1 hour later in the EU, so maybe that's why attendance is rather low. So I should see a spike in about an hour then of viewers, huh? Well, hopefully they'll come on in here and do, and rewind back here to the beginning and see what's going on there. Let me see here. Brian Allen, what's up? He says, I started learning Elliott waves before this post because of your gift. I appreciate you. Well, hey, man, I appreciate you too, man. Again, guys, it's not enough. Some people, they do real well. They can read things and figure it out, and they do real well. I'm one of those people, okay? But there's always that, when you start, it seems like when you're learning something, how it's being taught is always in the perfect world, right? It's this perfect, if it's Elliott wave, perfect, Elliott wave structure. If it's Wyckoff, it's this perfect range, right? And then when you try to do it in real life, you're like, what the heck just happened? Because, you get in there and you're like, you really have to actually understand it to apply it. And so, again, that's why we do those live streams every week with Tier 3, help you get from that, that theory to that application, real-world application. I go through it. We look at current charts. I explain what my thoughts are, why I'm labeling it a certain way, how else I could label it, but why I may not be, and just to kind of help you rationalize and work through it, with the rules and the guidelines. And, of course, the same thing with Wyckoff as well. So, yeah. Trader XO, what's up, buddy? Good to see you checking in, man. Hey there, Mike. Yeah, appreciate you. Good to see you checking in. Let's see here. Hello Crypto says, I hear Chris's voice in my head now getting onto me when I do something stupid trading. It's so effective. Hey there, TV Canal. Good to see you. Let me see here. Anyway, yeah, guys. So here we go. Bitcoin, right? So, this is kind of a weird count here. We kind of struggled with it a little bit as it was coming down. But, and especially if you got this thing down here at the end, you're like, what the heck's going on there? I think this may be, this 1-2 coming off here, working on a 3. If it is, again, nothing's really changed. That wave 3 has that minimum 77,900 target, all right? Locally here last night, right before we were breaking out, I published the update, video update there for our members. And I mentioned this barrier triangle that was forming here. And, it had a target up around this kind of 62,600 kind of area. And I said, if we get an impulsive rally out of there, we should get that. Of course, we're looking for a breakout above the top of the range here at this wave B to, this is a 1-2 as a flat correction here. But moving above that wave B, kind of adding confidence to this local count. And then above this wave B up here, it's 63,726 and 58 cents to kind of add confidence to the larger count. And so it's done that, as you can see here. As a matter of fact, let me kind of zoom in here a minute. We can see here on the 1 hour that we got the breakout, the retest, and then the strong rally back up, broke out, retest, rally back up, resistance at the R1 pivot on the H1 R1 pivot right now. But again, if we're looking right here, I don't know. Let me kind of zoom in a minute here. I don't know. It looks like maybe like an ABC 1, ABC 3, pull back, and then maybe an ABC up here. So maybe it's like a potentially an ending diagonal or something coming off here. But the bigger picture is that we've got a wave 3 target up here at 65,321. Now that gives us a minimum wave 5 up here at 66,490. And the next degree level up, that this is wave 5 of potentially of this parentheses 3 here at 67,391. So I could see wave 3 and or 5 overextending so that they've reached this target up here. Big picture though, guys. Let me see here. There's that big picture, guys. It's still what we're looking at. All we did was get this 3 waves down, bull flag here, breakout, retest, and here we go rallying the heck up right now, right? So grand scheme of things, that's where we are. We still want to see a breakout of the swing high here, and especially at R1 pivot to really keep it going. Remember, this wave, parentheses 3 here, 79,440, is a minimum target. That's off this 1, 2, 3. But I believe we are seeing subdivisions in here, so I think this wave parentheses 3 is going to go up at least to 88,525 here, potentially even higher off that. But for right now, still looking good. Remember, this chart is from our from my weekly newsletter. So you can get this chart in there, kind of updated every week as we're continuing on through there. But it looks nice and clean, and I like the way it's rolling so far here. As you can see on the daily, we have this hidden bullish divergence that happened right here between the swing low here and the swing low in this price. Higher lows, lower lows here. Signals continuation of the trend. So we should look for this trend to continue up. Daily Stochh RSI is just broken out of oversold there, so a lot of room for it to continue rallying up. Are we talking about some Moonvember? Is that what everybody's talking about? Maybe. I wouldn't be surprised. I think it's what it should happen. But as always, I don't want to get too far out ahead of myself. Again, guys, you're going to have a lot of moon boys out there that are going to be screaming at you every time, no matter what's price doing. They're going to tell you it's going to go up, and you should be buying. Until it goes, you may remember right here, everybody, all the moon boys are telling you to buy. And then when it got down here, they told you to sell. It's funny, guys. If you read Wyckoff's books, they were printed 100 plus years ago, right? And I tell you guys that these same things I talk about have just been what happens consistently, right, throughout history. The market's always the same. It never changes. You always have new blood that comes in and does the same thing that the previous new blood did at the other highs, right? And so all these things that I talk about that are happening in the market, these generalisms about it, with new traders especially, same thing you'll see that Wyckoff was writing about 100 plus years ago. And so one of those things is that people basically, they sell before an event happens. So they sell out of fear, right? If it says that something's going to happen, something bad, they're going to start selling. And they don't actually sell when the bad thing happens. They sell prior to it, right? But then they don't buy. And this is the problem, right? So, they're going to sell here where you've got this going. They're all scared. They're going to sell here. But then when you're at the bottom, they don't buy. And this is the big problem. Everybody, they're buying up here and they're selling on down into here. And that's not the way you should be trading, right? That doesn't make a whole lot of sense. But it's what most people do generally because they don't really know what they're doing. And so it just kind of leads to that, being fearful. It's kind of like I used to use this analogy, but it's like, if there's a big, huge forest fire or something going, right, and all these animals are running away from it. Well, as they meet new animals, those new animals don't sit there and go, well, what's going on? They just see everybody running. They jump on board and run with them. And it's the same thing. It's the same thing in the markets here, guys. Up here, when everything starts selling, everybody, starts selling at some point along the way here. They, as it catches them, they start selling, right? They don't look. They don't pay attention to what may be happening. They just sell. And for a lot of people, it usually entails loss, or at least a loss of a large bit of their potential profit. And so, the latter isn't as bad as the former, but, again, if you can keep yourself from losing a lot of what you make, it makes life a lot easier, doesn't it? Dim Sum, what's going on? Good to see you. Mahdi's here. Let me see here. Andrew says, hard to chart FOMO towards the peak. Yeah, you just got to work with it. Yeah, I mean, once you get into price discovery above where your previous all-time highs are, at that point, you're basically looking at fib levels, guys. And price might or might not, end at those fib levels. Historically, Bitcoin does not. Historically, toward the end of the bull run, Bitcoin continues to fly up, right? So that brings up the next point. Recently we've had these derivatives-based ETFs that the SEC has allowed, right? But no physical. I say physical Bitcoin. No ETFs that actually hold Bitcoin, right? But supposedly, there's a lot of chatter that they're actually going to likely allow them, starting next year, allow one or two or something like that starting next year. So I bring this up because usually that bull run for Bitcoin ends around the end of the year, right? Q4. But we've also been kind of playing around with the idea that maybe it extends into the beginning of Q3 next year, something summertime, right? Maybe. And so if I needed a narrative of why price could continue to run up through the end of the year, that would probably be it. It would run up until a Bitcoin ETF, one that holds Bitcoin, is actually approved, and then the market would sell the news, and that would be it. Kind of like what happened with, right around the time that the CME and the CBOE came in with futures there, 2017, right? Everybody kind of sold off after that. Potentially same idea there, I think. But at this point, I don't know for sure. So I just, it's easier just to say, okay, we're going to expect it at the end of the year, in December or whatever, and then we'll just see what happens. Does it happen in December? If it doesn't, it continues on. Well, now we've got our next target next summer, potentially. And so that, kind of leaves us interesting with stocks and whatnot, because, is Bitcoin, the fact that it's more risky than stocks, does Bitcoin go down first and then everything else, kind of follow afterward? But remember, it all runs in relation to the dollar. And so this week we've got the Fed meeting tomorrow, or the Fed comments tomorrow. And again, like I said earlier, they're expected to taper, to mention that they're going to start tapering. I don't think they're going to mention any kind of interest rate hike or anything yet. I wouldn't be surprised if they did, but I just think it's too early for that. But nonetheless, taper means that, interest rate hikes should be coming. And I think that it's going to come earlier than what they said. They were looking at mid-year next year for the first rate hike. I think it's likely we could get it here in maybe Q1, maybe toward the end of Q1, probably more so into Q2. And then you might see them raise it maybe 3 times at least next year, depending on how everything continues going with the price rises right now. So I still get a lot of kickback. Everybody still thinks hyperinflation is this thing that's going to happen. What in their responses, really, guys, God, man, I hope you guys are never this childish, but it's always like very derogatory. Treat me like I'm an idiot. I'm like, I do this for a living, right? And you got some Yahoo that doesn't do this for a living saying, oh, you're an idiot, whatever. People are funny like that. But here's the thing. What I've noticed is none of them understand how money is actually created. They don't understand. They think Fed prints, so monetary inflation, period. They don't understand how that money has to move from the Fed to get out into the broader economy. They don't understand that laws prevent the Fed from directly giving the public any money. It has to go through the banks. Banks have to create loans. Banks have to facilitate, they either create loans for everybody, us, companies and whatnot, or they facilitate the transaction between the Fed and the government in the purchase of securities, right? And that's what, again, leads to this whole reverse repo, rates that have been going way up there. Not rates, but the amount of money going into it and all these other things. And what people don't seem to understand is, first of all, you're not going to get monetary inflation via bank loans if your bank loans are dropping off, right? Second of all, people don't understand that when you pay down your debt, when you make a payment on your debt, you're destroying dollars. They might be able to grab onto this concept that, if you create loans, that creates dollars that come out to the economy, which then now you have more dollars chasing the same goods, right? And that's where you get the monetary inflation leading to price inflation, right? But if you have people paying off loans, it works the opposite way. They're taking their dollars, putting them back to the bank, right? Goes right back into the bank, destroys dollars. That's disinflationary, at least potentially deflationary, depending on how much of that happens. Now, not only do you have that, savings. Savings is a type of disinflation, potentially deflationary, right? Because again, you're taking dollars out of the broader economy there and just sticking them in the bank. They're not chasing the same goods. You have less dollars now chasing those goods. So, people are very simple in the way they think, and they're not interested really in moving beyond that. Again, it's all about the sound bites. We've talked about this before. So I hope you guys have, I've convinced you to think beyond that and kind of, just so you're not stuck in that and you're saying those silly things. Because at some point, I'll usually try and help people understand, but at some point, especially if they're just continually derogatory and just stupid, rude, I'm just like, whatever, I'm done. I don't have time. If you want to learn, I'll be glad to share it with you. If you don't want to learn, and you want to be an idiot, I'm going to let you be an idiot and I'm going to move on. And you can be an idiot by yourself. It really is as simple as that, guys. I'm going to tell you what, not just in markets, but in life, kindness rules. If you don't think so, you haven't lived. Okay? Why not take the opportunity to make the world a better place one person at a time? Everybody you talk to, right? I actually responded to somebody a little disparagingly because I was just, their attitude just totally caught me off. And, I went back and I actually apologized. It's there on Twitter. I said, I apologize. I said, just because you were acting that way didn't give me the right to act the same way. The world is much better. It turns on kindness. And I apologize sincerely. And I meant it. And I do. I have no desire to get into stupid little arguments with people I'm not out here to convince you that you have to listen to me, guys. I'm out here. I give you my thoughts. I tell you why. It's up to you whether you want to think on it and listen or not, or even consider it or not. Most people are not very open-minded, though. And which is funny because they're not very well versed in the subject matter they're talking about, right? It's usually those who are much more well versed who are actually more willing to listen. So, it goes back to that whole thing about, the wise kind of always doubt themselves and they question and the less, I don't want to use the word educated, the less, those people that know less about that particular subject matter tend to be more boisterous and more sure of themselves. Yeah, it works in all things, guys, not just trading. So anyway, let me see here. Who else is here? Let's see. Brian. Yeah, Brian Allen says, I came in right after you were mentioning the Tier 3 OG pricing. Could you mention the offer again? Yeah, so basically the idea is this, guys. It is if you are paying regular pricing, which, you go to the site, you get the regular pricing, right? Which, like I said, if you're paying for quarterly, biannual, annual, whatever, you're already getting pretty big discounts off the normal price, right? The $199 a month. But we have this OG pricing that has only been available to a small subset of our of members because they were with us for so long, and we grandfathered their old rate in, and so I've never given that rate to anybody else. But what I'm saying here now is, if you buy the normal 6-month biannual package, right, Tier 3, has to be Tier 3 biannual, then what I'm going to do is I'm going to set your account up so that as long as you remain a member, after that 6 months, you will be able to get that OG pricing, okay? So what does that mean? Well, let me tell you guys. Let me show you here. All right. So first of all, make sure that you guys are checking in here, entering the giveaway here. Let me kind of put that link in there for you. This is our next giveaway. I got a little bit behind in doing this, so instead of doing it this Friday, we'll do the drawing next Tuesday, and we'll do double the drawing. So there's going to be 6 winners draw next Tuesday, okay? There's going to be 2 PS5 winners, 2 annual, and 2 biannual winners, okay? But right down here is where we're looking at here, okay? And so the OG discounts, basically, if you purchase that biannual regular price thing there, then after that, if you just want to go to a month-to-month, instead of paying $199 a month, you only pay $100 a month. If you want to buy the quarterly after that, you're going to get $252.45 cheaper than what it is regularly. And then, of course, 395.50 off the biannual, and then 572 off the regular. Again, so for a regular annual price, it's like $1,500 and some change. This OG pricing brings it down to $900 and some change for the year. For the year of Tier 3. So, again, this isn't for everybody, but if you're with us and you plan to be with us a while and you want to significantly, change how much you're paying, this is the way to do it. If you think you want to come in and be with us a while, this is the way to do it right now. Because again, I don't know that I'll ever do this again. But these rates will be good for you for as long as you remain a member. So you just keep on remaining a member, you keep on getting the low price. Like I said, you can get a lot cheaper there, right? This is almost, it's almost half off in many cases here of what the already discounted prices are, especially when you go on the quarterly and biannual and all that kind of stuff. So, yeah, really great there. Let me see here. Amen to kindness rolling. What's going on, Asum Risk? I see you there. Yeah, exactly. Oh, man. People just don't know, right? Asum Risk says, I don't care what it's called. What I care about is dollar buy is 40% less. So unless there's a coherent argument that my purchasing power is staying even, go away, MA. Yeah. Hank says the last two bull runs ended in summer. Except they weren't the bull runs, Hank. Those were interior. Those weren't like the full bull run. Those were just like stops along the way, wave 3 or whatever, wave 1, wave 3. It wasn't 5 waves, the big one. Like what we saw at the end of 2013 or the end of what it was, 2011 or whatever. Yeah, so that's what I'm looking at there. Let me see here. Just in time, what's up? He says, I know LTC isn't cool right now, but it looks like it could be set up for a nice move. Hey, it's funny you mentioned that. I mentioned, in this week's market breakdown, one of the charts I put in there was a Litecoin against Bitcoin chart. And I think it may be a sleeper that most people aren't going to see happen. So we'll talk about that here in a minute, right? Let me see here. Where do you think that wave 4 will come after wave 3 is complete? Andy wants to know. Well, it really depends on where wave 3 goes, Andy. So I think normally, in these, okay, let me do it this way. I think it should pull back a minimum of 23.6%. I think that's probably the best way to do it. So if say, let's just say this was wave 3 right here, right? And we come out here and measure it. Wave 2 there. I just got it real quick there. And then, again, in mine, I've got my, because we're making such big moves here, I've got my fib levels based on log scale. And so that 23.6. So if it was to get to, if wave 3 was to end here at 79, 400 or so, then we'd be looking initially at a 67,294 maybe on that. That would be my initial target. And so we would just have to see how it all plays out. If we're going up to 88, 525 kind of area up here, you're looking at probably maybe 73,000. The higher up this goes, maybe you'll have a fast and short kind of drop back and then a rally back up. But this right here is just a simple zigzag, so I would expect wave 4 to potentially take a little bit longer, be a little bit more complex, so maybe a triangle or a flat correction or something, since this is just a simple zigzag right here. So, and in those cases, it might even not get down that low. So we'll just have to see how it finishes up here with wave 3 first, really, right? All right, Hank, I'm not going to argue about this, man. God, you tire me out sometimes, man. Again, this is not a bump in the road. This is, a full set of waves here in the back here. And then this is, as we're getting up here, you see, this 2019 is not this. You see what I'm saying? This is not this, okay? That's what I'm talking about. So that's all I'm going to say about that. I'm not getting into arguments about this nonsense. There's that logic is perfectly fine. It works exceedingly well. Let me see here. So anyway, so here we go about that. If we look at the dollar, so as you can see here, the dollar's looking pretty good at the moment. We had this nice huge rally up out of this at the end of last week, end of this month. Took us right on out the channel here. We've got a channel target up there at 94.725, which takes us right below that 94.742 level we're kind of looking for to be that first clue, real kind of clue that the macro bottom may be in there in January. Right now, we've just pulled back in 3 waves here to the pivot, 50% level kind of area. And now we're rallying pretty well off here. So we should be looking to continue up higher there. Wave parentheses 3 has a target of 95.488. And so, again, it just kind of continues on with nothing changing with what we've already been looking at. Let me see here. Here's the daily. The daily, if you didn't like that, look at this daily. Big, huge, bullish engulfing candle here off this pullback from earlier in the month. So a couple of weeks of pullback there, and then a huge bullish engulfing candle, a little bit of sideways at the pivot, and now trying to rally up out of there. So in this case, we have this larger descending channel here with a pattern target up here of about 95.331. And that should take you up there around the R2 pivot. And, really, if we're pushing up above the R1 to the R2 pivot, the odds are significantly increased. We're going to continue higher rather than pull back down below the pivot there. So, we'll continue to watch that moving higher there. As you can see, we're right now trying to get above. We've kind of pushed up against this. We're pushing against this weekly pivot here. And so here we go again, not quite bullish engulfing here. It starts up higher than what it closed on this from the previous week. Current candle, though, looking to break out above this. It's just this right here that we're trying to get above, this supply right in this area. And so once we break out about that, it should be a pretty easy move up toward that 97 area. We've got all this inefficiency right here. So it should be a pretty easy move up toward this cluster. And then, again, that's a breakout above the weekly pivot, and then we'll see how that continues on there. Again, looking at the monthly, looks good still. Again, when it comes to Stochh RSI on the larger time frames, the monthly or the weekly, it can stay overbought or oversold for a longer period of time because it is that higher time frame there. So, looking pretty good at the moment. Just got to get above this. Boom. Then we've got this area. We get above there. This cluster right here. We get above there. And we should be breaking out above these highs over here if we can do that. But that's a long way off. It's a lot of movement in the way. And so we'll continue to see how this plays out along the way here. But nonetheless, looking pretty decent so far. Let me show this other chart. This is just the other chart I was watching. Again, this is the one that I put in the newsletter previously. Again, we got the breakout on high volume there to the neckline. We came back. We dipped below, but then boom, right back up. The next day there, bullish engulfing candle. And all this volume down here, right here at the bottom, sending that up. So, getting through this ascending channel resistance as well, what we're pushing through right now, trying to stay above. Pushing up, we hit this ascending channel resistance. If you look in there, see how we hit that right there? So breakout above that, again, should lead to channel resistance. And then, again, possibly we've got this double-headed kind of inverted head and shoulders here. Inverse head and shoulders. So, left shoulder. And we got one head, two heads. That right there. And then we have the other shoulder. And so with this, we do have the expansion of volume as the shoulder completed here and rallied up and broke out, which is what we look for. I'm still not a big fan of head and shoulders patterns, but if you want one, I think that's probably a pretty decent one to look at. Again, target-wise here, we've got this blue swing low to swing high. That target is up here at 97.77. And then, of course, you have this this ascending channel. The breakout of that gives you a pattern target. Oh, no, I'm sorry. That pattern target is this inverse head and shoulders. That's up there at around 98.725. So, again, lots of steps to go here. But, people have been shorting the dollar from here all the way up here. They're still shorting. So, it is what it is. People are going to do what they're going to do, right? Let me see here. Let me see here. Yeah, I get what you're saying, Hank, about the bull run being a top with a 50% retrace. But we're talking about we're talking about the cycles here. Not just a bull run. We're talking about the cycle. The bull run cycle, this full bull run cycle. Not the interior little bull runs along the way. Yeah. But, again, using your logic, you could look down at a small little wave one, right, where it moves $100 and then pulls back, $75, right? And you go, oh, there's a bull run. Let me see here. Yeah, Andy, it may pull back to the previous all-time high for wave 4, maybe. Again, we'll have to see how far this goes up. If wave 3 really kind of overextends and heads up there toward 100,000 or so, I've previously discussed possibilities for, wave 3 maybe even hitting 106,000 or something like that. I don't think wave 4 would come all the way back down to that, 65,000 area where we had that previous all-time high that took, right before the summer there. Yeah, I don't think we'd come back quite, that far. I mean, we could. It's not a, it's not saying that we can't, but I think, again, with the way that price generally moves, I would expect it to go more sideways than down, just because the wave 2 was a zigzag down and it pulled back pretty good. So yeah, I think Hank's still looking for mid-80s for the DXY. And he could be right. Again, I've never said he's definitely not right. We still need, again, the first step is to get above that 94,742 kind of area. But that's only the first step. That doesn't guarantee that the bottom's in. This is just not really, it's a lot of overlap. It's not any real like this. This is what you kind of want to see on this movement here. And so that's what you want to see. You're really getting a lot more of this overlap, though, which is what keeps it questionable as far as, is it the bottom end or is this maybe some sort of, I don't know, maybe even a WXY maybe, or I don't know, a WXY, so that's a WXYXZ, maybe something like that. So there's still some possibilities there, but none of it, is guaranteed. So we're just playing locally here, watching what goes on, trying to take clues and hints from what's going on with, with everything else here, with the economy and whatnot. Speaking of which, in case you all didn't know that you can get this, I've talked about the inverted yield curve. You can get your info right here. So this is a treasury.gov. It's a treasury.gov site here. Throw that in there. And this gives you your, what you're looking for here, your rates, right? And so, as you can see here, this is as of Monday, November 1st. Your 20-year is paying more than your 30-year. That's that inversion we're talking about. The big inversion that you really want to pay attention to is if you have the 3-month flip the 10-year. Now, there's a pretty good, way away from that right now. But it could really ramp up quickly. It has the ability to do that. And so you look at it, you go, oh, it's only, it's 0.05 versus 1.58. We ain't got nothing to worry about. It could ramp up quite quickly, actually. So you just want to watch it. But as you can see here, what I was talking about, the front end of the yield curve here, the short end, you've got the 2-month inverted over the 3 and the 6. The 1 year, though, is a bit higher here, about 50% higher, as you can see. So yeah, at least in the very front end of the curve and in the back end of the curve, you've got that, which is just flattening out the rest of the curve. And most often when the curve gets this point of where it is, how flat it is, it usually continues on to invert at the front end here at the greater point. But like I said, you get that pressure on the very front end, the very short term, and then on the back end of it, puts pressure on all this right here. And so these will change, especially depending on how hawkish the Fed sounds tomorrow. Because again, the whole idea is if the Fed's hawkish, then they're going to taper. Taper leads to interest rates coming down. Remember, the whole idea of interest rates, guys, is that you get paid more interest, higher interest rates over a longer period of time because that person is taking, or that company or whatever it is taking on more risk, right? So it's riskier for me to loan you $10,000 over 30 years than it is for me to lend you $10,000 over a year. When you take into consideration all the things, the time value of money, opportunity cost, all that stuff. And so naturally the curve should slope up. It should, as the dates extend, as you get further out, you should be getting paid a higher interest rate. That's why it becomes a problem when you get a lower or a higher interest rate prior to it. You get that inversion, because that's a sign that there's trouble in the economy, because the market is anticipating something happening sooner, which again ends up leading to rate changes, which affect then the back end of the curve. The economy comes in, the government comes in, they taper, they raise the rates, which puts pressure on that front end of the curve, which cools down the economy. Then the Fed keeps it low, which then affects the long end of the curve. So it just kind of draws out like that. And so that's why we watch. It's probably one of the most important things you can watch if you're investing, guys. But you can get it right there, and you have all your information right there as far as what's inverting where and whatnot. So yeah, just keep watching that and see how that changes there. Could turn out to be quite interesting. By the way, also, just because the curve inverts doesn't mean that it will necessarily get a recession. So the way to understand this is all recessions since 1956 in the U.S. have been preceded by an inverted yield curve. But not all inverted yield curves resulted in a recession. So there's been more inversions that haven't actually led to it. And so sometimes they're just a short term and it's just an anomaly. But the longer that inversion remains, the more likely it's legitimate as far as leading into a recession. Average lead time is around 14 months. That doesn't mean it can't happen, next month or something, but a recession or whatever. But it could also take more than 14 months, So it's just a warning that, hey, the market says that things are going a little wonky right now and you need to be paying attention, because what happens is when you get that inversion, stocks drop, right? Everybody starts getting their money out of stocks, putting them in bonds, to deal with that, right? And so then we get the market, again, recession comes in, right? Minimum recession, but as I've been talking about, I think we're on the cusp of actual possible depression. So we'll see how all that plays out. Until that time, you can continue buying on things that are rising, guys. Just don't lie to yourself about it. There's a lot of big names out there who tell you that Bitcoin is definitely the future and whatever. And I would like it to be, because it means great things for my investments. But I am not going to blindly believe it's so. So we will continue as long as things continue to look good. Things don't look good, we'll take a different approach. I think if you're going to be a trader or investor for any length of time, I think you have to take that approach. You can't just blindly follow and go, oh God, I believe it's going to happen. Because if it doesn't, you're screwed. You lose, right? You lose it all. Because you said, listen, no matter what, this is the way things are going to be. And so if they don't turn out that way, you're going to be too stubborn to lock in any kind of profits that you may have, or to limit your losses. It's kind of like you get that idea that, well, I'm all in into Bitcoin. If it goes to zero, well, then I lose it all. Well, I don't think that's necessarily the brightest way to affect your future, right? If you're correct and things are great. But most people aren't correct in those types of situations, right? So why would you why would you put yourself in that situation where you're just forcing yourself to potentially be wrong, to lose money? I don't know. Doesn't make a lot of sense to me, but y'all got to do what you got to do, right? Whatever it happens to be. So yeah. You know what? You know what? I think we may have an issue with Twitch. Give me just a minute here, guys. I think all the discussions here... No, there's some discussions coming from Twitch. Okay. I was thinking maybe we might have Twitch users couldn't actually converse here, but I see, never mind. I see that we do have some, so we're all good. Yeah, there's some risk. You were the one I saw right there. Yeah, right there. So, okay, so we're good there. I'm not going to worry about that. Anyway, so yeah, you know, things doing what we expect things to do, right? If we jump out here, Ethereum, everybody wants to talk about Ethereum, right? So there's Ethereum, still looking at it rallying as we expect. I hadn't heard you pop off in a bit. That's what it was, yeah. Ethereum, you know, pushing to a new all-time high right now, guys. So right there at a high of 45.24 and 20 cents there on Coinbase so far. You know, big picture-wise, you know, again, we're above this this supply here, as you can see. It took it, and then we created a demand here. So this is all demand now that we're rallying out of. Impulsive breakout above this large ascending channel here. Should have price targeting the channel resistance. Potentially getting it up here around 64.08. I don't think that's the end. I think that's just a mark along the way. But for right now, you know, we'll go with that on there. If you're looking for counts here, you got a 1, 2, 3, 4, 5. So there's a 1, 2, 3, 4, probably 5 here. Let me see. Thanks, I might have got that one target up there. Yeah, see, it's up there, 2.72 extension there, heading back up. So if we look at this as a 1, and this is a 2, yeah, there we go, that's why. So I'm looking at this as a 1, 2, and that 3, I'm looking at a minimum 3 up there at 64.08. That gives us a minimum 5 at 72.83. But again, these are just minimums, and if this is the end of the cycle coming up here, then I would expect them to overextend quite a bit. You know, and I think we could see probably, you know, overall pricing probably, you know, maybe hitting 14, 15,000 at least. Maybe, yeah. I think there's a good possibility, especially with everybody in there. But, man, gas fees on Ethereum right now are still ridiculous. Still really, really high. But, you know, people are going to buy on what they're going to buy on whatever the hype is at the moment. And so Ethereum, it seems to be it. Part of the help in that, you know, was DeFi originally, and now it is the NFTs, of course, right? So, you know, whatever it takes, pushing it up, it pushes it up. Ethereum is not the same as Bitcoin. They're two different platforms, guys. You know, at least for now anyway. So, you know, I see a lot of people trying to compare apples to oranges when it comes to trading. And I don't think that's going to help you out any. You know, you got to compare like to like and then just worry about that. But, you know, again, everybody comes in to chase the fast dollar right now, which means, as I've said before, all this money everybody's talking about making right now, I say everybody. It's not really everybody. It just seems like everybody because the much more significant group that loses money is not telling you anything, right? But I believe that most of the money that's made individually in this bull run is going to be lost when the bull run ends. Okay? So, I don't operate in DeFi. But really, guys, what you're going to see is the same thing that we see every time at a market top in any market. It's easy to make money in that bull run, especially toward the final stage of that bull run where it just seems to kind of go up, and you really can't go wrong, right? Like I said, everybody's a genius in a bull run. What usually happens, though, is when that bull run ends, people think it's going to continue up, and so they don't take their profits, or they continue to hold while it's rolling down, and so they lose their profits, and they even lose money, and then they keep trying to get in as it's continuing to drop, and they end up no better off than where they started, and they lose all that money. And that's, you know, again, that's what's historically, 100 years plus, guys, stocks, you know, commodities, crypto, that's going to be the expectation. That's what always happens. There's no reason that things are going to be any different here. And I say that because a lot of your bigger names out there are trying to push you. Oh yeah, Bitcoin's going to do all this and that and that and that. Great transfer of wealth and whatever. It's a bunch of nonsense. Most of the wealth, just like any other market, any other time, is going to concentrate into the hands of the haves, right? Not the have-nots. The have-nots have temporary touch of it, paper profits, but they don't know enough to take profits. They don't understand enough to take profits and to protect those profits. Sadly, it is what it is, guys. Okay? This place is a tomb. I'm going to the nut shop where it's fun. I am such a downer, right? Like I said, though, guys, I'm not here, to blow smoke up your rear end. I'm trying to give you the realities of trading and what's likely to happen. Especially if you're new to trading, you might not understand this. If you've been around for a bit, you might have seen this and you might understand. But it just is what it is. Your job is to not be a part of that. Your job is to make sure that you're locking in profits and doing something with them so that you have that money after it's done. Everybody should be jumping in when the bull market's frothy as it starts, right? But you've got to understand that that's what it is. It's frothiness. It's overexuberance. It's going to come crashing down when you get to that point. So you just have to trade, with an understanding of what's going on there rather than lying to yourself about it. Because the market can go really crazy. Again, we're looking at minimum targets of, 90,000 or whatever, right? But the end of this bull run, it can really explode up higher, 180, 260, 320. It's possible. We don't know if it's going to happen. We can't tell you for sure it's going to happen now, but it's definitely possible. It's definitely not possible. Not possible. Yeah, double negatives. So, it is what it is. But, the problem is that the new traders come in, the amateur traders come in, and have no clue what they're doing, and they lie to themselves because they get caught up in the frothiness and they listen to the big names out there. Again, the same big names, guys, that were telling you right here. They were telling you to buy all the way here. It's just a little bit. It's going to go higher. It's all new all-time high. And then they told you to sell down here. It's the same people that the new people are going to come in and follow at the top and do the same thing again. Those same people are going to be telling you buy at the top. And then when it gets ready to finally bounce, they're going to be like, oh, no, sell. Yeah. And then it'll bounce. And they'll be like, oh, wait a minute, we got another chance. Buy. And then it'll turn around and drop even lower. Just play the moves along the way, guys. Don't think, don't think too far ahead of yourself when the market's like this. You can have your broader ideas of what may be happening, but make sure that you temper them with an understanding of what's going on locally. And that way you don't find yourself in that situation. And you can save your money, you can keep your money, and when everybody else is crying about all the money they lost and going back to work for people they don't want to work for, you'll be all right? That's the goal. Hey there, Kyle. Thank you for showing up, man. I appreciate you. Nathan, what's up? He says, I'm still waiting for ICP to pump. He says, comp finally went on a run. Yeah, so you're going to see a lot of this coming in. I've made no... I've not kept it a secret that, I've got a decent size... we're getting a decent size bag of XMY because it hasn't done anything yet. Looking to ride that up on a pump. So, we'll see what happens with that. It's right now right around 5 sats. So it's pumped pretty egregiously. I can't even say it. Pretty largely a few times in the past. So, it's something easy to kind of follow along with. Even right now, at 5, you should expect at least a 10-time return on that, I would think. At least. If it does like it's pumped previously, then it gets a lot larger. So here's the Litecoin chart I was talking about. Let me see here. This one right here. Look at this, guys. This weekly chart. Let me see here. Hunter says, I know a few like that. That's why I'm going to stay right here listening to old doom and gloom. It's not doom and gloom. It's just keeping you aware of the realities and the likelihoods rather than just sticking you on a cloud and puffing up your rear end, right? So Here's what we're looking at with Litecoin versus Bitcoin, guys. We've got this large range here. Look at this range. This range has been in since March of 17, guys. Look at this right here. So you had your volume all right here. Look what's happened to volume ever since. Drop down right here. Accumulation likely going on all the way through since then. We've got this wedge going. We dip right above it and shot back up. Dip right below the range lows here. And so I think it's quite possible that maybe we've got our phase A here, which is our stopping phase. And then we've got phase B here. And this may very well be phase C right here. This little bit of this spring here locally on the weekly. So, a breakout of this descending resistance here, this black resistance, gives us a target of this red resistance. A breakout of that gives us a pattern target of 0.01376662. That's about a 264% profit there. Then I think it should probably continue up because it gets you above this high volume node here. So, a breakout of the range gives you a range pattern target here of another 84, almost 0.5% of this, the height of this range. So 0.0, well, I guess I can just do this right here. 0.040976962 would be the target on that. But I think we go even higher here. We hit at least the EQ at 0.09732 kind of area of this large weekly wick here. And, could potentially go up above that. But I think, locally there's a lot of possibilities in there. You've got all this, bullish divergence after bullish divergence after bullish divergence coming in from back here in May of last year, right? And so just a lot going on there. Stochastic RSI on the weekly is crossed bullishly now. It's threatening to break out. So, let's just say it does go from where it's at right here to this target up here. What is that? Yeah, I just screwed that up. Try it one more time. Basically from about here to about right there. That's 1,193, almost 1,194% on that. So a lot of potential upside I think most people are going to miss. Again, people are still out there, oh, Litecoin isn't worth something while they go trade in something like Shibu, right? I mean, come on, guys. That's all you're trading is stuff that's worthless. So pay attention. Let me see here. Okay, here. Hank says, when LTC pumps, the bull run is done. Dash to trash, just like last time. Yeah, we're already seeing that with a lot of the junk here. I mean, the fact that you've got all these stupid little meme coins based after Elon, right? Yeah, what is it? You had Doge, and then you went to Shibu, and then you've got, what is it, Elon Doge or Doge Elon or something like that. Then you got Marvin, and it's just so stupid. These aren't anything special, guys. They're just getting you because you're in there with your money being frothy and putting it in whatever you want. That's why they're being created, because they know you're going to buy it. It's not that they're anything special. But, it's hard to convince people because they really want it to be, right? Because they go, oh, if I had only bought Shibu when it was, just came out, I would be a billionaire now. Everybody tends to think that way. Stop thinking that way. It's not going to help you as a trader, guys, or as an investor. It's not. You're not going to get, you'll be lucky if that ever happens to you. Anything similar, slightly similar to that ever happens to you. Most of successful investing and trading is just doing the same boring things over and over again and building your account over time, your capital account over time. That's what it is. But that's not sexy, right? People come in, everything's popping, they want to be billionaires tomorrow. Good luck with that. Hank says he made silly money with SHIB. Yeah, a lot of people did. I really hope most of them end up keeping it. I don't think they will. Again, just, normal, what usually happens with markets. People don't. But I hope they do. I don't ever wish anybody to lose money in the markets, guys. That's why I tell you, it's okay to buy in frothy markets. You just have to understand what you're doing. You can't lie to yourself about the stage in which the market may be in. Right? So, yeah. Let me see here. You wonder where you should put your stop loss when there is no price action below that for LTC. Well, it depends on your, on what you're looking to do there. You shouldn't be risking more than 1 or 2% of your portfolio on any one trade. So if you figure out where you enter, and if you have to do 2%, you figure out how much money 2% of your portfolio is, and then you look at your position size and you see how far does that have to go down to hit that level. It's as simple as that. It really is. Looking at this here, I mean, you could potentially look right here at the S1 pivot if you want to do it that way. But if you're picking a target like that, then you need to do that and then decide, and then the correct way is to then figure out what your position size is after you do that. The idea would be, okay, well, if I were to enter right here and it were to drop to the S1 pivot, how much money is that, right? In terms of 2%. So if your portfolio is $10,000, you shouldn't lose more than $200 on that drop. So you have to figure, well, okay, so that's $200 there. So then that'll tell you, you use that to figure out what your position size will be. Because whatever your position size is, you can't lose $200, more than $200 when it hits that. So, I mean, that's how you do it. Hank, you were right about the clocks going back there. There's a bill coming in. Justin Time says, I also shibbed the SHIB, sold as Coinbase crashed. Let me see here. Dim Sum says, got any thoughts on SCRT, Secret Network, Privacy Protocol, and the Cosmos ecosystem? I have no thoughts on it, no. I haven't looked at it, so I don't have any thoughts on it. Let me see here. If you're into stocks, guys, there's ByteBit. Bit Digital, BTBT. And so this was one of the stocks that we have. We have I post at least once a week, sometimes a couple times a week, a stocks short squeeze list that I'm watching. And this was on it. And so it was down here and, of course, popped up there. So that's already produced a profit. Right now, with where it's hit up here, has already produced a profit of 33.6% over a few days. So that's pretty fantastic. We've broken out above the descending resistance there. Targets of 1455 and 1971 right now. That's locally. Potentially larger targets coming in. And of course, with it being what it is with with crypto, as long as crypto's going up, it should go up as well, right? So as we look at this here, just watching for that breakout there to continue up higher. Yeah, so locally anyway, those are local targets right there we're looking at still. Another one, I put this one in the newsletter. This is another short squeeze, another one on the short squeeze list that I'm watching. This is Root, which is Root Incorporated. They've got this great looking descending wedge here. Starts back here in December of last year. It's almost a year long. You can see that as it's come down, you start seeing volume starting to pick up. So you're getting more and more interest. Overall here, you see the volume starts to pick up on average, and it's really picked up in this area here. So we had a rally, was that the 1st November yesterday, that took it up to the daily pivot there. We're pulling back today. We'll see if we can get a impulsive rally above that pivot and above this descending channel resistance. If we do, that gives us a pattern target based on the height of this wedge of about 121.5%, $6.42. Continuation above that, targets of 15.45, 25.64 as it goes up there. But again, on that on that short squeeze list as a possibility for a short squeeze. So, by the way, you can also notice locally here you've got bullish divergence from about a month ago, and then you've got this dip down, reset into oversold on Stochh RSI, breakout of oversold, bullish cross. So looking for some continuation up there to kind of break out there and take off. So some good kind of stuff going on there. Nathan says, "Hi, short float. High short float makes for big moves." I can't even say it. Yeah, the smaller your float is, guys. By the way, the smaller the float is, the more strength you can potentially get out of a short squeeze. It's not just how much of your float is short, but how much float do you have in relation to the overall, issuance. Because if you've got a lot of that just held, not available, in that float out there for you to get your hands on, it means that if we have a short squeeze type event, it's going to chase up price a lot further, a lot harder than what it normally might. So, yeah, pay attention to that. Let me see. What channel is that short squeeze list in Discord? That is let me see here exactly. I believe it's under member channels. Yeah, it's the short. The heading is stocks short squeeze list. It's right under VIP alt opportunities, which is right under the weekly streams channels in there. So yeah, that's where you'll find it there. Let me see here. So yeah, that's where you'll find that in there, high or low. You can get that there. Let's see here. Another one we're looking at, last month, I had this chart posted, and this thing has rallied well off this low here recently. Rallied up about 131%. So a good chart there. Still looking for it to go higher, obviously. Wave 3 there. Let me see. What do we got here? This kind of rallies over here. So, that may be a 1. Okay, this looks like maybe a 1 and then a flat with a 2. So a running flat here. 1, 2, 3, 4. To get us a 5 up there potentially at 209576. So, yeah, looking good on that. Again, range, volume drop off, accumulation going on here, setting up. But if you were in Tier 3 in Discord there, you had that chart as well. Lots of stuff making lots of money. It's always good. Yeah, look at Bill already knows. Thankfully, the Texas clocks go back this Sunday, so synchronicity will be resumed. Yeah, it's the same thing I said earlier. I said we're going to, here in the U.S., we're going to gain that hour back this weekend. So, yeah. Gives you an extra hour to enter the giveaway, guys. By the way, as far as the giveaway goes, guys, don't forget that if you've already won, you can't win again. It's not that you can't win the same prize. You can't win again. Whatever the prize drawing that you won, whether you decide to take it or not, you're not eligible to enter again, to win again. So, yeah. Just want to, I don't want you to think that, you can go do this again and again and do your thing there. Give you that heads up. Let's see here. What else we got going on here? Let's check on TLT here, guys. What's going on with TLT? What's he working with this? I guess we can do this, right? All right. TLT working its way back up here. So I've got this as a 1-2 potentially as a flat correction. And then 1-2 working on 3 with the target of this ascending parallel channel EQ there. Here's the channel there. There's the EQ. So looking up here right around 149.5 or so. And then that gives us a wave 5 just around this wave B resistance at 151 or so. So, again, that's what we're looking at locally here on the daily. You can see that we broke out. We came in sideways between the R1 and the pivot, dropped to the pivot, retested support. So a breakout above that swing high should indicate that we're likely to continue up higher on there and kind of keep this count going. Again, remember, guys, TLT is your ETF for, as it says here, 20-plus year Treasury bonds. So it's your long-term Treasury bonds ETF. The idea being that when people get more nervous about the market, they become risk off, and so they take their stuff out of the market, out of stocks and whatever, and they put it into the longer term government securities, safer bet, right? And so that's generally why you'll see this rising. As you know, we've been watching it since it came down toward these lows here, and it's done good coming off this March 21 low. You can see right here, all this did was just kind of did this, right? It's up, comes back, and now we're looking for it to to continue up, but really it's this area right here. This is good. You like to see this type of thing right here, where you've got your resistance, retest this support, continues to rally up. That's a good sign right there. This resistance held this support, so I want to see that continuing up higher there. It doesn't guarantee anything, but it's a good sign. As you can see, we got rejected right here as we got into this high volume node, pulled back, breakout above that. Once we're above that, we should feel pretty good. They'll give you a 1 up here. You'll pull back for a 2, probably into this high volume node here, and then pop off for your 3 higher. So should be good on that. Let me see here. Everybody's talking about rail, huh? Let's see what we got here. This is Hank's chart. See here. Oh, it pulled up another browser. All right. Yeah, there's good volume coming off here on this rally. So larger candle spreads, larger volume. Small overlapping candle spreads, decreasing volume usually indicates a pullback. Probably a 1-2. Get a break on that 3 there. Let me see here. Let me kind of pull this this chart up. It's all about transportation. Again, a lot of demand for transportation, but transportation is having issues, bottlenecks. Oh, did I put rain? Saw it right as I did that. And so, again, more demand, less supply, prices should go up, right? See here. Which one was it you were looking at there? Freight Car America. Okay. Just want to make sure I got the right one here. There we go. That's what I'm looking for. Why did I put train? Jeez, oh whiz. It's rail. That's why you put rain. See, I'm just like all confused here, guys. You just ignore me. I know, you always do. Man, oh man, what a day. There we go. We got rail. You know what it was? It was because at the bottom here, right here, I was reading the freight car and I was thinking train. And that's how we got to where we are. So. Oh, man. So anyway, daily looks good. Where, we dip down into reset into oversold here. Man, I hope I'm entertaining for you guys. I know I'm entertaining myself. Dip down into oversold here, crossed bullishly, pulling back a little bit, but looks good at the moment. We just want to see some rally above this kind of swing high area here. Let me zoom in a little bit on this local one here. Yeah, I guess we can get a like a 1-2 flat, 3-4-5, A, B, C. So yeah, I mean, it looks like we're trying to hold here on the 4 hour, finding some support there. So locally, we'll zoom out to the weekly time frame in a minute here. But if you're looking short term, as long as this bottom holds up here, if we get a breakout up here above this 4 hour R1 pivot, right around 460, I think that sends us up. Wave B is right here, this swing high at $4.73. So if you want to wait for that, you can get some confirmation, some added confidence to your account. But I think you have short term 558 for wave 3 minimum, and then wave 5 minimum at 592 locally on that. Let's see here. Weekly, I like the structure. Again, moved in, it was starting to move in between the R1 and the pivot. Retested, tested pivot as support, successful. Rallied above the swing high, says we should go. Rallied up above the R1, almost to the R2, pulled back to this previous area of resistance. Rallied hard back up here to R4, pulled back to R2. R4 kind of doing this thing here. So yeah, I think this is probably pretty good resistance right here. So I'd say a breakout above that would be a pretty good sign. So yeah, just getting above that 462 should kind of take you about that. But you want to see an impulsive breakout. You want to see some, expanding volume and candle spread. Again, look how your candle spreads here are getting larger as it's going, and your volume's expanding. That is a trend. That is the physical. That is what a trend looks like. If you want to define it visually, that's what it is. The pullback here is a lot of overlapping, very small candles, volume dropping off. That's corrective. Again, buying in up here and then over here accumulating before it takes off again, right? So that's what I would look for right there. And so, yeah. That's what I'd look at. Wedge-wise, I think we're probably looking at something along those lines, which gives you a pattern target then of about $3.13 above the point of breakout. It's almost 69%. And so as it should, that target takes you around the start of the wedge. By the way, guys, if you've got a proper wedge, its target should take you toward the beginning of the wedge. And so there we go. It's right there. So that looks good. Breaking out, I'd say you got a minimum target of 1039, but more a likely target of 1395, I think. So that looks good. I'm going to have to put this in there for Discord members. Let me see here. You think you need my level sub for TV as well? So easy to be able to save unlimited charge. Yeah, it does help. I mean, because I don't know, you guys that maybe aren't a part of TWC, I don't know if you know, but I don't erase anything. I keep all the charts. And so, I'm always putting out new charts. And our members actually get access to the live charts. So I post the live chart so they can just bring it up and it's live. They don't have to do anything. And they can do it that way. So, again, it's just more of that transparency, I guess. We're going to be wrong sometimes, guys. It's what it is as being a trader. I don't want to ever make our members feel like they're never going to be wrong or that they're going to be right so many more times than they'll be wrong, because that isn't reality. You can get on good streaks where you're wrong a lot, or where you're right a lot more times than you're wrong, but you're going to get on streaks where you're wrong a lot more times than you're right as well. And so, again, risk management is the most important part of trading that you guys are going to do every day as traders or even investors. And so it's important that, that you don't have somebody out there, yanking your chain and telling you something that isn't true. If you're going to be, guys, I can't say this enough. If you're in the market, you're talking about your real money. You're putting real money in there. This is money that you had to trade time and effort for. And so if you're going to do that, then you need to be serious about it. You need to be more interested in understanding the realities of trading rather than just the pipe dreams and the smoke. Because that pipe dreams and smoke is where, guys, there are so many other people there who do so much less than we do, and they do it so terribly. And yet y'all go in and you pay them money over and over and over again because they tell you what you want to hear. And then you lose money. And then you go with the all paid groups or scams, blah, 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 which, most of them aren't very well done. But this is why I don't do that. This is why I'm always honest with you guys. And I let you know, listen, trading is a job, guys. Again, if you look at Wyckoff and when he talks about things that he's figured out 100 plus years ago, and the same things that, that JP Morgan would say, because, he hung out with JP Morgan, right? And Jesse Livermore and all these people. And it all comes down to, basically this idea that trading is a job. Trading is a professional skill set. You cannot come in not knowing what you're doing and expect to make a ton of money and keep it. You're not going to be able to do that. But the more you treat it like a job, which means the more you develop your skill set properly, the more successful you can be at that job, just as any other job in life. Okay? So whether you're with us or not, just make sure that you guys understand that. Otherwise, you're just setting yourself up to lose so much of what your income, or your money, your capital, guys. By the way, notice this is the swing here. This is the swing. This is what caught price here. As you can see, you had the break. You got near it, got reversed, broke up into it about halfway, pulled back, came out, came in, and look at how it found right here. Got to make that different. Just do this real quick here. Yeah. You can see how this is all working here, booming. So we just need to break out above that line, and that should set us up to head up higher there. But look at where it is within your structure here, right? It's right here. Resistance right there. It tried to go out. It got rejected. Resistance, boom, pop out. Came support. Support. Coming down, dropping through it. Finding support on this lower area right here, which is nothing more than basically this right here. You just got to wick below it. But look how I found support right there. And resistance right there. And that's where you're finding support here. So again, if it breaks up out of that, you should be good to go higher with that. That's what we're looking at. So yeah. Let's see here. Let me see here. Yeah, the trades are super thin. 100, 200 shares per minute for rail. Yeah. It is pretty low, guys. You can look over here. If you look on the weekly, your weekly volume, if you look up right here at the volume, last week, weekly volume was 2.877 million. So again, like Hank mentioned earlier, it's like a penny stock, right? So you're going to take on more risk. But again, remember, risk, if you're taking on more risk, there should be a higher reward. So if you're willing to take on this risk, because it's a higher risk environment here, it's lower liquidity, lower trading going on, then you're looking for a significant move. You're looking for 70% or something. If you're only looking for 10% on don't do it on some trade like this. There's too much risk associated with it to really make it worthwhile if you do that. Now you can notice right here, we had 51.8 million, and then right here on this next week, on 29th of March week over there, 45.5 million. So, there's the potential for it to continue rallying up there. But you're going to expect to get lighter trade here on the pullback. But what you want to see is that, again, like this, where you see those larger candle spreads and that volume expanding as it goes up. You want to see that to continue that trend. And so then you're going to see the volume expand as well on that, again, above where you're at the moment. But remember, guys, most traders, they're not interested in buying here. They're not interested in buying here. They're not interested in buying here. They're interested in buying when it breaks out of here. Then they get interested in buying. Here's what it is. But if you can learn how to figure out where the bottom may be, where accumulation is happening, you're going to set yourself, hiccups there. You're going to set yourself way ahead. You're not going to make a whole lot of money in the grand scheme of things trying to buy the breakouts of these large swings. You're going to make a lot more money understanding where accumulation is happening and then potentially getting in there. So yeah. So a lot of stuff in there, guys. A lot of possibility for this. But again, a proper a corrective pullback, you're going to see a lot of overlap, a lot of very small candle spreads, a lot of dojis a lot of times in there, and you're going to see volume pull back. And again, that's the idea, that you have this selling going on, in this range here, and toward the bottom of that range, you've got the larger players grabbing that stock, in this case, stock. And so that takes it out of the hands of the people who are going to trade it short term. So your volume's going to die off. There's less and less supply out there for them to continue to sell off. And so your volume's necessarily going to die off. And then when they feel like the market has basically had enough of the downside, they'll test it. Again, that's what we teach, in Wyckoff there every Monday. But they'll test it. And then if that test comes out positive, that the market's, done pulling back, they'll bid up the price. And price will still go up. It will start going up. But the public isn't going to be interested in buying here. They're going to be interested in buying on the breakout. So the goal is to get in here so that way you can ride this up. And then you don't have to chase it in up here. You can let the other yahoos out there chase it, right? Chase it up and push price up for you. They do the work for you. That's the key, guys. That's the goal. That's what you should be looking to do. All right? So, yeah. Tested positive for accumulation. Sure as heck beats testing positive for COVID, right? Oh, I'm not going to go. I'm not going to start all that. Don't start, guys. I didn't mean it. I mean, I kind of did, but nonetheless. Let's see here. Where are our other charts here? Silver. Let's take a look at silver here. Sorry, guys. Let me grab a drink here real quick. So silver taking it on the kisser this morning. Rejected here at the 4-hour pivot, and now continuing lower here, breaking down below that swing low right there. I think it's a 1-2. I think we're working on 3, which has a target there of 22.21. Dropping below my wave circle B support here at 22.325 should add confidence to this overall count. Again, looking for it to continue to head lower off that. Remember, in the grand scheme of things, this is the range here, right? All the way back here from back in August of last year, more than a year long. What I don't like about the range, I especially don't like this huge bit of volume that came in at the top here as it made that swing up there. But even beyond here, you're still having spikes around what you see here. You still have these spikes up here. Here's another one. A little bit lower spike here, but nonetheless, the spikes are in this, the same general area here. And it shouldn't be. If this is phase A and this is phase B, well, necessarily, like I showed you on the other charts, you should be seeing a lot less volume come in. Instead, we're still seeing volume kind of just staying up here at this average level here, and then you get these spikes still popping out. So, it doesn't guarantee that this isn't accumulation going on here, but it does make me more cautious about it being so. If we can get a breakdown below this swing low here, that should say, okay, yeah, we're definitely headed lower at that point. Coming down, below $10 is what I'm thinking. But we'll see as it plays out. Right now, as you can see, we've pulled back here to the dropping below the daily pivot here. Again, the idea that it's 1, 2, 3, 4, 5. So 1, 2, potentially a 3 heading down and continuing down with that. This looks like an ABC to me. You can go 1, 2, and then 1, 2, 3, 4, 5. So, again, locally, you can go way over here to this one at 22.70. If you're dropping below that, that should indicate that you're heading lower. If you really want some confirmation on that. So, yeah. Let me see here. If we do happen to get a breakout above this swing high here, though, then that adds some support for the idea that maybe the bottom here we might see $40 or $50 on silver. But again, watching what happens in this local area now. Want to see, do we get this continuation down? I think if we get that continuation down, I think that just continues to set us up for further down there with it. let's see here. By the way, I'm long USD yen right now from, where am I from? 113.693. So up about 19.5 pips at the moment. So if any of y'all are interested in that. No, and me telling you what I'm trading as far as Forex goes cannot move the Forex market. 95% of the volume is controlled by 10 banks. So yeah, you're not that big, guys. It may work on the smaller little crap coins there in crypto, but it does not work the same way in Forex. So yeah. Yeah, we can take a look at that Bitcoin Ethereum chart. Sure, you guys know I've got that chart. Oh, there we go. I mean, Ethereum, Bitcoin. God dog it. All right, so last update was 3 weeks ago or so. It looks like we dipped just a bit further here to finish that off. So we'll just move that over there. Just that slight little dip further. Heading up. Let's see here. All right, so if wave B is up here at right there at that 0.071945.2, we'll rally right up to it and pull back a bit. We're moving in sideways between the R1 and the pivot. Basically, just pull back to this previous area of support and resistance right here. Again, always look at these. Look left here, guys. Makes it easy for you. Resistance, resistance, resistance. Support, resistance, support, resistance here again. We pulled back down into it. The top part of it, a little bit, it's a little bit above it here, where all this clustering is. It's not just the level, but it's like right around it there. You see how you've got all this this clustering going on in this area here. So that's where it pulled back to. So if we can get a rally up there and higher, again, still looking for that wave 3 up here near the 0.009993 kind of area. And that gives us a wave 5, at least right here around 0.109 or so. May go up to the EQ here at 0.1139 or so, maybe. So could still potentially see that happening. Okay. So far looking good. I know Raul's out there making a lot of noise. All I can say is be careful. Again, he may have more of a reason, trying to get y'all to play in with him to kind of pump it, but I think he believes that there's a possibility for Ethereum to continue to do really well, right? So, yeah. Another way to look at this area here is that you've got this volume coming off. You see how the volume's continuing down all the way through? So if you look at it as a range here, it looks like accumulation. And so you've got your last point of support here, pull up, last point of support. You're looking for something like this to happen. Large volume, large candle spread to say there's your jump across the creek, which signals the end of the range. Break out, maybe pull back toward this area and then continue up. But yeah, this range here looks like accumulation. Just looking real, briefly at the volume profile here. You can see that it's trended down here the entire way. So that's the difference between that one and the other one. The other one, silver had that big breakup, and then price afterward just continued to stay high, right? Instead of continuing to drop off like this did here. This one, of course, having its volume down here toward the bottoms, right in there. So actually, this probably looks something like That's probably more correct right there. So you have a small bit of distribution. Then you have your local selling climax, automatic rally, ST and phase B. Stop here, pull back. Last point of support, higher highs. Potentially higher lows right here, which would give us bullish market structure off, off this area here into June 21. So, yeah, looks good as far as that goes as well. So I think we'll still see Ethereum continue to outperform against Bitcoin overall. So yeah, kind of looking at that. Nothing really happening with SHIB. Same thing we were looking at previously. There's volume and RSI divergence here, but it's possible this could be wave 4 of wave 5. And if that's the case, then a breakout above that swing high give us targets of 97.16 and 11.160 here. Now it could, continue to fly up even more like it did here or here. It could, but those are initial targets there for wave 5 if it continues up. Again, the idea that it could be like a 1, 2, 3, 4, 5. There might be a triangle going on here. So we'll have to see how it plays out from that going on there. But right now we are noticing that there is this volume and oscillator divergence right now. So, yeah, BNB rallying up. We keep track of that every day. Sol, we keep track of that every day. It's been rallying as well. We keep Luna. We watch Luna every day. Yeah, so a lot of these ones, and check the sector that you're talking about. You're talking about DeFi. You're talking about NFTs. You're talking about exchange coins, BNB, FTT, stuff like that, or FTX. But anyway, if you're seeing, one or two of them rise or whatever, usually that whole kind of ecosystem rises with it. The whole sector kind of goes up. But what you want to do, guys, the smart way to trade is to look for the outperformers in that group. So understand what sector you're looking at, and then look for the ones in there that are outperforming. How do you know if they're outperforming? When all of them are pulling back, which one pulls back the least? That's a good clue. That's your outperformer. And that's the one you want to keep an eye on. That's the one you probably want to trade when you're doing that. So, yeah. If you're with us, then Dot did really well. I see you guys talking about it, rallying up and doing its thing. And, of course, we were already on that. We had our targets up there. It just continued to blow out. So, no surprise there with it. And we'll continue to work with it as price does its thing. We'll adjust the count if needed and how it works. So, yeah. Anyway, guys, that'll do it. I'm done. So, I hope you guys are doing well. I hope you guys have a great trading week. I hope I've done everything, I know I've done everything that I could think of to hopefully help you understand why you need to be more purposeful in your actions as investors and traders. Okay? Make sure that you know what you're doing, when you're doing it, how you're doing it. Okay? Try to, especially if you're new, I know it's a hard thing, but try to be careful with following a lot of these larger accounts online. The only thing I say, guys, you got to learn how to trade. You can't come in here and expect to follow people and make money. All right? They're not going to be as transparent or as open with you as I am. You're going to find out a lot of them miraculously sell the tops and buy the bottoms. Life isn't like that, okay? Anyway, hope that makes a lot of sense, guys. I'm not here to tell you not to make money or that you need to do A, B, or C, but the reality of it is trading is a profession. It has a skill set, just like anything else out there, okay? And so you want to make sure that you take that seriously and you learn how to use that skill set, how to gain that skill set properly, and then you practice. You have to practice, guys. 1 week, a couple of days of trying something. You go get an Elliott Wave book or you read it online from some site, the little basics, and you try it for a day or two and you go, oh, it doesn't work. Or Wyckoff especially. You know, the big thing was during, 2018 there, I was talking about Wyckoff a lot, and a lot of people pushed back because, oh, it doesn't work, and yet it's done nothing but work, right? We've talked about it consistently for the last few years. Because it does, but you have to get it correct. Okay, guys? You can't do it lackadaisically. You've got to be purposeful in your practice and practicing correctly. All right? Same thing with anything in life. All right, guys, I'm out of here. Remember, the only thing you control in the market is how much you lose. So keep on working at risk management, all right? Hopefully you guys will join us in Discord. Like I said, howtotradetowin.com. Get on there. Buy your normal price biannual tier 3 access, and for as long as you remain a member after that 6 months, I'll make sure that your account is set up so that you can get the OG pricing that we have, which is, like I said, up to 50% off of what you normally pay, which becomes huge when you think about the longer term purchases, biannual or annual, because we already give you discounts for that as well. So discounts of those discounts or discounts of the discounted price. Yeah. Anyway, a lot of money to be saved in doing that. I hope you guys have a great week. Remember, I'll be back on Friday, 11 a.m. Central Standard Time. Same place here. Join in. And in the meantime, don't forget to join the giveaway there, right? Sign up for that. Get it done. All right, guys. Y'all have a great week. And I will see y'all later. Take care.